All right.
Professionals.
Can they see
You're
us?
not in
Hey.
the, you're not really in the. Yeah, you gotta lean towards me. Get
I'm
cozy.
in. I'm in.
Could,
All right. What's going on, everybody? Quiet in the background. What's going on, everybody? Bitcoin Birch here with your boy, Captain Coinagy. Want to say hey? Say hey to
What's
the
up,
people.
guys? It's your boy, Captain Coinagy.
Shill Nye, shout
That's
out.
your boy, Shill Nye.
All right, so this is a private live stream. We'll make it public at a later time, so we don't expect hundreds or thousands of people to jump in, which should give the few of you that are here an opportunity to ask questions. You can definitely post your comments in the YouTube comment channel on the Discord,
You should
and
pull it up on that one.
I do have it pulled up. It's right here, and I also have it pulled up on YouTube. So what we're going to be doing today is cover a couple of technical analysis indicators and also just answer some basic questions. But we're going to build on this. And the idea is for those of you who have some pressing questions or just want to know some things, we'll do our best to answer. All right, so the kind of the purpose of this, you guys, is to show you, or really to give you guys an opportunity to ask some questions. And also because I want Captain Coinagy here to be able to walk through some of his favorite indicators. But many of you guys who are using TradingView or different charting software, I mean TradingView is obviously the most primary one, have probably seen or heard of or maybe even use Ichimoku clouds. And so there is the standard Ichimoku cloud or script that comes built in. When you click on indicators in TradingView and simply search for the Ichimoku cloud, you can pull it up. It gives you the default settings for Forex and the stock market, but because crypto's 24/7, the standard is as follows. So typically we have the conversion lines on 20, the baselines on 60, 120 lagging span, and then the displacement is always 30. That's your standard Ichimoku, and it's used by a couple of the folks that I definitely respect highly, especially using Ichimokus, which we'll do a separate video that dives a little bit more into Ichimoku. But and it's a custom script, and it was really hard to find. So I want to give a shout out to Aries for finding it. But it's from this trader Crip, and essentially his script is available here, and we will post that. I think we're logged into to Crip's account right now. So here is the link to the script in Discord. Just shared it in Discord for you guys. Basically what you do is you take the script, you copy it to your clipboard, you open up your TradingView, and then at the bottom of TradingView you see this button that says Pine Editor, and essentially you'll open it up and there'll be some default lines that are already written in. Just clear everything out, paste the script, and then hit save on the top right. Once you do that, you can go ahead and close, refresh the page, and then you go into, it won't be here by default, it won't be here. So once you refresh the page, you can go into your indicators, and then you'll go to My Scripts, and then you'll see the script available there. And it actually already has all the settings built in, and it's a little bit more fine-tuned, at least that's what I'm told by some of the guys who are way better than me at this. So I'm excited to make sure that I'm using all the right tools, and I just thought that was a cool find that I wanted to share with you guys. Basics of kind of when you look at Iki, typically it's supposed to be kind of an all-in-one tool. The reason it was kind of designed was kind of to be like an all-in-one to measure all kinds of different price actions and price movement. A lot of people just like to play the edges of the clouds for bounces, for support, but ideally the Kijun, which is this small, I don't know if you can see it very well on the screen. Yeah. Go ahead and just, I guess we can change the color of the actual Kijun. Make it a little bit darker. I just wanted to make sure you guys can see this, which is also called the baseline, right? And then you have the Tenkin, which is the conversion line. So this line, this blue line is your traditional, it's your Tenkin, and then your Kijun is the red. This Kijun is supposed to line up with the 50% fib retracement level, and it depends on kind of how you're drawing. Captain and I were just kind of going over this. It kind of depends on how you're drawing your fib from the swing high to the swing low. But if we're drawing it using the base of the cloud with this previous low, as you can see, the 50 level just about lines up with that, with that baseline number. So what we're using that for is we're using that to try to predict where we might find some resistance. What we would be looking to do is take profits as it approaches that fib level. Oftentimes when I'm making altcoin trades as well, I'll just pull up, let me just pull up, I think one of the most undervalued tools is often the fib line, and a lot of people have their own opinions on it. But for me personally, I'm not obsessed with TA. I'm buying a lot of the coins that I'm buying for fundamental reasons, because I think there's good FA coming up or what have you. And as I look at, let me just get all this junk off of here. As I look at most of my entries from a TA perspective, I'm usually playing pretty simple trend line, support. I like to use the cloud to find some of those levels, but I'm usually playing pretty simple fib levels when I'm looking for a place to take profit. So if I was looking at a longer term chart, and I also tend to try to look at longer term charts, 1 day, 4 hours. I'm not usually on 15-minute charts, especially trading alts. I know Coinergy likes to trade the 1-minute candles on Bitcoin, but he can show you that in a little while. We go into your typical fib. What we'll do is we'll go from the swing high and we'll come down to that low, which is basically right here. Kind of pull it out a little bit, and if we're making an entry in this, after it came up, and actually where we looked to make an entry originally when we first shared KMD with you guys, we actually made an entry right here as it kind of broke out of this triangle. And what we used as our profit taking target was the 382 fib level. And as you can see, it depending on how you draw this line and how perfectly you draw it, it basically was rejected at that level. You're not going to want to put your sell orders right on that fib level, because if you think about it, all the traders are trying to beat other traders, right? So if everyone knows that this is the fib level, and it also happens to be the top of the cloud, they're going to try to beat the other people. You don't want people to sell kind of in front of you, preventing your sell order from hitting. So what you'll see is a lot of times it'll either just touch it with a wick, or it'll actually start to sell off a little bit sooner. And so in this case, I might put sell orders starting slightly above 50K sat, 51K sat, and just hope that I can catch a couple of these quick buys. And as you can see, the 236 acted as some support later on. So the cloud and the fib are you're going to see that on most of my charts, especially the fib levels, because they play so well for taking profit. It's also math. I mean, it's a mathematical equation, and it does all the hard work for you. So hopefully that helps a couple of you if you weren't sure how to use that.
Before you, I think I'm not sure, but I think because it made a swing low here on this wick.
You have to start again on the new one.
So it might actually be this swing high that's giving it the 50. I don't know. It's kind of weird.
Technically, this is the new swing high. I mean, they can't see where I'm pointing.
I would say that this would be the new swing high,
right? Because of the low.
Low. But even then, that's below it. So
it's not. Yeah. I mean, so that's actually right on it. I mean, the way that you have it drawn up right now, it's a little bit off, but that's kind of the general idea. Yeah. So Cap, why don't you jump in? This is a Bitcoin chart here, so why don't we do some real-time Bitcoin TA here, and let's look at a longer-term trend line.
Sure. Also, if you guys have any specific questions about TA in general, about using any specific indicator, feel free to put that in the comments. I'm open to any questions, as long as I know if it's some odd remote indicator I've never heard of, I won't be able to help you. But for most of the common ones, I'm very well versed in using them. So if you have any questions, I'd be more than happy to answer them.
Perfect.
But meanwhile, we'll look at this 4-hour chart and see what's going on. So the first thing I look at whenever I'm doing any TA is I look at the longer term trends. I'll draw trend lines trying to capture the overarching patterns that we're seeing. So obviously, as we all know, we had our big breakout. I'm not going to zoom out all the way, but there was some line here, and so we broke out, and this was the overall bear downtrend. And so
you're talking about the 120-day log downtrend, like the
long So this thing, that stretched up all the way to
and they've seen that.
Yeah, so I mean, everyone's seen this goddamn triangle, and was itching for it to break out, and it did. So that's good.
And then it retested.
Yeah, and then so we have this retest,
that
and so that's very common, and it's actually very healthy to see when you break out of these downtrends. You see a retest of the downtrend. You know, it's acting as resistance in the past, and then it turns, flips around, and now it acts as support. So we've bounced off of that. And now we've kind of come into this accumulation phase. We aren't super bullish. We're not constantly making higher. I mean, we are making kind of higher highs, but for the most part, we're very.
But then we just made
flat
a lower
here.
almost. Yeah.
So we're kind of in this accumulation phase, and what I'm looking for is I found this trend line right here, and so I'm looking for Bitcoin to be kind of generally following, so generally following this as a support. And so one thing I'd like to note is that when I'm drawing these trend lines, some people try and stick by very specific rules. You can only touch a wick, or you can only touch the body. You can't combine the wick or the body. And I'm very not what the opposite of conservative. I don't know why I'm blanking.
Liberal. I'm very liberal about how you use it.
I'm very liberal about how I use, the wicks and the bodies of the candles. So really, what I'm trying to find is clearly. I'm sure that you can all see this. This is obviously, it acted as some kind of support here. So if we zoom in, obviously on these wicks, it actually supported. It broke below, but then it came back up. Acted support here, it broke below, and then, it acted as resistance pretty much here, broke above for a little bit, acted as support for, a couple hours, maybe a day, and then it broke back below. And then when we came back, it acted, you can see on this wick, it was resistance, and then now it's acting as support, and hopefully here support. We're starting to see a little green doji starting to form.
And just for the record too, you showed me this trend line yesterday. I mean, we were just kind of doing some basic TA, and then as you guys should all probably know by now, there was that huge red dildo earlier today, and the original trend line on your computer that you had, it basically wicked right off of that trend line again. So
it did. I opened a nice.
Yeah, it was a nice. Exactly. So this is actually a trend line that I know that he's followed for going back a few weeks now. So. I think that's pretty cool. For me, I am probably a little more conservative with trend lines, or a little bit more by the book. Again, I'm also not a TA expert, and I just don't want to get trolled on Twitter for having a wick connect to a body, or a body connect to a wick. So I try to stay a little bit more consistent, but I think the general rule of thumb is you have to understand it's a range anyways. And so as long as you're not, in my opinion, sometimes you see those super long wicks, right?
Mm-hmm.
And then everything else is fairly normal. You shouldn't connect from like a super long wick to then like a bunch of bodies, right? Like that doesn't make as much sense. So I think use some common sense, and then anytime anytime a line is basically proven to hold support at least 3 times, technically that's a trend line. So you can find trend lines in all sorts of different time frames.
Absolutely. Yeah, so regarding my liberal feel about using trend lines, I just think that trying to stick to some very specific formula for creating them doesn't really work out for you most of the time, because especially in an extremely volatile market where people on some exchanges are given up to 100 times leverage, all it takes is for one guy to market buy or market sell something, right at the support, and it will dip below, and then maybe some, because the institutional traders, the people who are trading with a lot of money, say that, they have the same charts as we do. So they're drawing the same lines. And so they could know that maybe there's a liquidity pool beneath this. So they'll try and drive it below without any intention of actually keeping it below that trend line or support line. So that's why, I'm okay with having it, kind of go through the bodies here and here, because, it's proven, time and time again that this is acting as support, then resistance, and support again. So this is what I'm really eyeing. Maybe we could draw it up a little bit, something like this. I'm eyeing this for our current support. And maybe we could be seeing some kind of triangle starting to form here, so that, or a pennant essentially. This would be a bull flag, because it is preceded by this uptrend. So typically you'll see this kind of formation break upwards, which is, I'm sure, what we all want to see. If that's not the case, I'll do so. one thing that you can find a lot in the history of Bitcoin is you can just find these triangles. They're everywhere, and essentially this is the bulls and the bears fighting. It's a consolidation pattern, and so you see this one, it breaks up. Yeah, I see. I mean, you see this one. This one's right here. This one broke up too. It's a little rough, and then so here I think there's another one that you could easily argue is this, right? And so this resistance right here, we broke out through it, and now we're kind of coming back down and retesting it as support again. So this, this original triangle that I'm drawing might not be true. What could be happening here is that we're just, breaking, we're breaking out, and now we're retesting this downtrend, which is, in the smallish area is kind of a confluence of support from both this and this. And you could see that happen especially right here, where it was really on where they crossed, and it was on both of them. So this could be, similar to what happened in this overall downtrend when we retested it here. And so this could just be just making sure it's healthy for it to be happening. Obviously this red candle scared all of us, but we're still sitting above this trend support that I really like.
Sometimes people are setting their bids based on previous horizontal support levels, and I know a couple people who have very, very large followings who play a lot of horizontal support, and they tend to like it. So this is that 8800 level just was a point that acted very pivotally, as I remember going back a couple months. One thing that you might see coming up here, though, is a Kumu twist. I mean, it depends on how this is going to play out, but if that'll be
quite close,
that'll be bearish if that happens, switching over, because so basically a twist is exactly what it sounds like, right? So you see these clouds twisting and coming together. Typically, when we're going from red to green to sound kind of elementary, when that twist happens, we usually will see a breakout. But you see the opposite effect here, right? With this twist going from green to red and red to green. So it remains to be seen. There's so many indicators that you can look at. My general rule of thumb is just 100x long every day until it goes to 20K. But I'm not a doctor or a financial advisor. We probably should have specified or started this video by specifying that we're not financial advisors, but you guys already all know that nothing we say is financial advice. What else? Especially not. Don't ever take financial advice from me. Do you use VPVR, visible range?
Yeah, so betraying my name as Captain Coinigy unfortunately does not yet offer the VPVR. So we can pull that up, and I can certainly give a little tutorial on how I like to use the VPVR. So the default settings are going to give you these huge fat bars that I really hate. So typically I like to change the row size to about 70, I think. Is that, yeah. So this will give you kind of a more detailed view of what you're looking for. So actually, this VPVR gives a very good. So when you see these high volumes, before I explain how to use it, I should explain what it is. So what these are is this is the volume traded. The blue is how much has been bought. The red is how much has been sold, or purple in this case. And it indicates the amount of volume that is traded at that price level. So the price level that this bar encompasses, so 311 to 356. So this area is this amount of volume is how much has been traded in that price area. And so when you see these bars that are really big and show a lot of trading action in that small price area, it means that people like to trade it there. It's an accepted value. There's the supply kind of equals demand, and so it's traded a lot. So what you're looking for really is areas where there's not very much volume, because these are the areas where there's clearly lots of volatility, because price doesn't like to stay here very long. That's what the small volume there means. So when you see these huge dips in volume, whenever you see the price go into there, you can expect it to not stay there for long. So you can expect volatility, and you can expect it to return to one of these areas where you do see high volume because that's where it's more stable. And so you can see that in this chart. So you see, we'll come back here to just this trading range. Where was I? It was just this uptrend, right? So you can see, here, in this space where we see very little trading volume, that is kind of right where we.
Would that be a no trade zone if you believe in a no trade zone?
Well, so it depends on what kind of trader you are. So if you're a breakout trader where you're playing these patterns, then you'd be entering kind of right at the top here, or right at the bottom here, and then you'd be trying to close your position somewhere once the volume where you see all the VPVR picking up again. And so you can see all these areas where there's almost no volume. It went through it really quickly. It was very volatile. So it's a great indicator for trying to find these areas, these price areas where you can, have your longs or shorts open, and it can act as essentially a confluence and an additional indicator that you can tack on top of your basic support and resistance levels. So yeah, that's awesome. The VPVR.
That's awesome. What other questions do you guys have? We wanted to make sure that we made this available for you guys to ask some specific questions. And if no one else watching currently cares about technical analysis, we do have a gem to Shill. But we'll give you guys a couple more. We'll give you guys a couple more minutes to ask some questions. On balance volume, yeah. Do you want to?
OBV, yes. So, actually, I have this video on YouTube that I haven't released yet.
Okay.
It's a tutorial on the OBV.
I've recently become a big fan of on balance volume as well. So why don't we? So while you pull that up, in a nutshell, essentially, it's trying to measure how price reacts to volume, and a lot of times you'll see large volume increases. So you'll see a lot of that buy pressure, that large volume, and then you won't see the price respond to it. And it's typically when the price is not responding to the increase in volume, then it's kind of like building up for something, like a volcano ready to explode, right?
Yep. So pretty much with any oscillator, if you give me any oscillator that's just like this, like the OBV, the RSI, just anything, while they're all based off of different data, you essentially read them all the same way. Understanding why, how they're calculated can certainly give you an edge, but really what you're looking for in any given oscillator is divergences with the price action. So when you see the price making higher highs, but the oscillator is making lower highs, that's a divergence. It doesn't matter which indicator it is. It's telling you that something behind the price doesn't actually match with the price, which tells you that there's probably a reversal coming. And so the OBV works exactly the same way as I'm sure many of you are aware of the RSI. Is that if
that's
you
like
see
the first indicator anyone learns.
Yeah, exactly. So if you see, for example, actually there's a great example right here. So you see, so the price makes a high, right? So right here, and then we see I'll let you make it a horizontal line so I don't accidentally mess up the angle here. So we see a high right here, right? And then we see the price dips down, whatever, blah 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 blah. But then the price makes a higher high right here. But on the OBV, it actually makes a lower high, and so this is a bearish signal. And so if you saw this, you would see, we made a reversal candle. You'd see that it was a lower high, and you could take this as an exit signal, and so you could have sold probably right around 97.50, somewhere around there, once you saw this this big red candle, and you could have played it all the way down to the support that you'd had drawn. So that works for any other oscillator. You're just looking for these divergences. Some oscillators will give you divergences, while others don't. They can also give you convergences and confirm the price action. So that's why it's good to look at a range of them, and the OBV is a very popular one. It's definitely a good thing to have in your trading arsenal if technical analysis is something that you're into, and that's how you use it. So,
what's your favorite time frame to trade? Specifically, if you're swing trading
candles,
Bitcoin. Man. If you're swing trading Bitcoin.
So swing trading. Okay, something that we should first clarify. I don't know how versed you all you all are on this, is there's different kinds of trading. So there's scalping, there's swing trading, there's day trading, and then there's, or there's day trading, there's swing trading, and then there's these long-term investments. And so scalping is, normally I like to consider scalping is, you're staying in a position for no longer than like
a few minutes,
a couple minutes, or maybe 10, 15 minutes. Day trading is where you're not holding your position for more than like a day or two. You're holding it for more than a day if things are still looking bullish or bearish, however you played it, but it's just moving slowly or whatever. But normally it's about a day. Then there's swing trading where you're holding it from a couple days to a couple weeks, and then there's your long-term investments where you're bag holding because you bought the top and you're an idiot.
So I like to swing trade primarily. Like if I'm trading at all, I like to swing trade. I like to play 2 to 4 weeks. I like to play midterm holds. I like to look at larger time frames, like 1 day, even 1 week time frames, and I like to try to get. It's a lot less stressful. I've been a lot more successful doing that. There's also, from a technical analysis standpoint, the larger the time frame, the more. The more confidence you can put into some of your indicators and things like that, right? So that's just me personally. What about you?
So I do lots of different kinds of trading because this is pretty much all I do with my time. So if I'm on BitMEX and I'm using leverage, I'll do scalps, I'll do day trades, and in those cases, I tend to look at 3, 5, 15-minute charts because that's what you look at. But that's not to say I don't have longer-term trends in the back of my mind, because you can't. You can, but you're going to be less successful if you don't have a general idea of what the longer-term trends are. So, when I am trying to make my long-term investments and my swing trades, I'm looking at, hour charts, 4-hour charts, and even daily charts. When I'm scalping and day trading, I'll look at shorter time frames, but I'll have those longer time frames. So I can't really say I only ever look at one time frame chart. It's just, when I'm making longer time frame investments, I'm only looking at the longer time frame charts. Whereas if I'm making shorter time frame investments, I'm looking at both short term and long term charts. So, cool. One thing that I like to talk about is specifically the 4-hour versus daily candles. So I know people like to talk about the daily candles a lot, and that's like the main thing you should be going off of. But if you do the math with how the stock market works, how all these indicators are based, you'll find that the 4-hour, because crypto is trading in a 24/7 market as opposed to 8 hours a day for 5 days a week, and then sometimes there's bank holidays, blah blah blah, where it's not even open for that long. So the daily chart on a typical stock or securities exchange is going to be actually about equivalent to a 4-hour chart on any crypto asset. So I prefer to look at those just because they tend to match our the indicators that already exist better. So yeah, that's just a little fun.
Very cool. Awesome. All right. Any last TA questions? We want to keep this to a reasonable time, so I guess we'll hop in. Feel free, though. I mean, you guys know we have the technical analysis question within the Discord channel. It's just the literally titled TA questions, and Captain and all of our other analysts have been in there answering questions and always do. So you can always throw stuff in there. We're going to do this regularly. So quick plug for the YouTube. This is the first YouTube video that we are putting out. We have a bunch more queued up. We've been interviewing coins. We have some special guests who have wanted to chat with us. We have some coin reviews, all kinds of stuff that's going to be coming. So make sure you smash that like button. Is that what the kids... You smash the like button, you smash the subscribe button, and that way you don't ever miss it. Of course, you won't miss it because we're going to tell you about it in Discord every time. Let's jump into a quick 5-10 minute gem. Just real quick, quick disclaimer. The people on this video are bullish on the aforementioned or the soon to be mentioned gem. I actually don't have any bags of it yet, so please don't ruin this for me.
Don't market.
There's only 45 of you on here. We're going to be talking about it more. I'm going to be buying some in the near future. But Cap, you found this. I'll let you kind of jump in and pull up the website or whatever.
Yeah. So
oh, what was your question, Josh? Sorry.
He market bought it already. He doesn't even know what it is.
How do you predict new all-time high levels from Fibonacci? So Fibonacci shows like
Yeah. So when you
support.
draw your Fibonacci from the swing high to swing low, you can use the projection, so the 1.618, et cetera, to make
above the previous all-time high.
Yeah, exactly.
So once you're done using it as resistance on the way, or like once it's come down and it's bouncing, you're looking at your take profit levels. Obviously, as it climbs up that ladder, once it breaks the previous all-time high, the fib actually extends above that previous all-time high, as he'll show you here, and it gives you so
if we're drawing like the overall uptrend that we've seen so far, you know, actually it's kind of hard to see it because of this color blue background. Right? But so right here is the 1.618 level, and so you could use that as a target for future.
And if you zoom out on any chart, which is always the first thing you want to do is always zoom out, then that might correlate to a previous.
Well, that actually does kind of correlate well with this.
Yeah,
top,
and it correlates pretty well to the previous top in this case as well. So if that's kind of how I'll set my targets. So hopefully that answers your question, Josh.
Alrighty, so on to the gem.
Onto the gem. Onto the gem. So
onto the gem.
Nice.
What you're all really here for?
Nice.
So we can just go on CoinMarketCap and pull up the basic tokenomics of it, and I'll explain what it does. So it is called Republic Network. Republic Protocol, Republic Network, who knows? They call it the network sometimes. So it's only a $50 million market cap, which is great.
So it's not a total shit.
It's not total shit coin. It's essentially what I like to call a small cap. And everyone has a different range for what small caps are. But yeah, so total supply, billion. Currently trading at about 10 cents with relatively high 24-hour volume considering the market cap of the coin a little bit over $3 million. So what this is it is a dark pool. It's a decentralized dark pool, and dark pools are essentially where whales or market makers go. It's not really a market maker, but whales, institutional investors, people with a lot of money. It's where they go to make trades OTC because if I want to, for example, trade $1 billion worth of Bitcoin for $1 billion worth of Ethereum. I'm not saying it's going to be that high, but even 100 million. If I go on some exchange and I just market sell that, that's going to scare people, and that's going to actually really affect the price. Not only due to slippage, which is as you sell down the order book, the price actually changes. And when you have $100 million, if I want to sell, if I market sell and the price is at 9,100, $100 million worth of buy orders is probably going to bring it below $1,000 possibly. It depends on how much liquidity is in the market.
So I guess the TLDR is really big whales buying or selling really large amounts don't log into Coinbase or KuCoin and wipe out order books. They have to go OTC in order to make some of the larger deals.
Right. So these dark pools are essentially providing this service to these big whales. And so in traditional stock markets, dark pools account for about 15% of the total volume. And as you guys know, I'm sure the volume of traditional markets is absolutely massive. And so if you wanted to extend that estimate into the crypto space, we could be looking at 15% of the total crypto volume. And honestly, I would estimate that considering just the nature of crypto, these large investors would probably actually account for even more than 15%.
I think it's a lot more than we think.
Yeah, I think it's a lot more than those estimates, give it credit for. And
pull up the calculator. So
Republic is essentially making a decentralized exchange, a dark pool, for these huge investors. So they're providing liquidity for them as well as doing an anonymous order matching. So the only thing you're going to be able to see out of it, you're not going to be able to see the volume. So you're only going to be able to see the price. So it's not going to be anything that's going to be able to scare institutional investors. No one's going to have to know who you are. You don't have to do any KYC. It's just like a decentralized anonymous thing. And so the reason why I'm bullish on this is because 15%, as a small, as a lower end estimate, is if at the top of the bull market we had $60 billion trading every day, 15% of that is, what is 15% of 60 billion?
let me just do that in my head real quick.
$9 billion. I think something.
So 60%.
Yeah, 60 or 15% of 60 billion. Yeah, So yeah, $9 billion. And so that would be $9 billion that could flow potentially daily just through this exchange. And then to make it better is the way they do the order matching is through these nodes that you can hold. And the nodes essentially are doing this proof of work algorithm, and whenever they match a trade, they take the fee, the maker and the taker fee. So if on a normal exchange you see 0.05%, 0.5%, or whatever the hell they're charging these days.
Yeah, I think it was like it was like, what did our guy tell us last night?
So 0.05%.
Yeah, he said 0.05, half a percent.
Yeah, so 0.5%. So,
and how many nodes do you think they're going to
be? So the number of nodes
cap?
that they can have. So it takes 100,000 Ren to essentially have a node.
So a little over a Bitcoin if you want to buy a node.
A little
today.
over a Bitcoin right now. And there's a total supply of 1 billion. And so they're expecting at a maximum there to be only 4,000 nodes running at any given time.
Let's just say that all those numbers. Let's say that the trading fees, because of the style of business, that's a traditional OTC trading fee. Let's say it's half of that, right? And if we're looking at,
even if you're making a tenth of $125,000,
when we really crunched conservative numbers, what we thought were conservative, a node holder in a really good scenario for Ren, if Ren becomes like a top 25 and it's really top 50, or a top 50, and it owns, I think importantly, like 20% of the market share for this dark pool market, $4,000 or $5,000 a day as a node payout, $1 million a year on this node is within reach mathematically. Right?
Absolutely ridiculous, and
it's ridiculous.
So that's a lot of money for just spending 1 Bitcoin right now. Obviously, it'll be.
Now, there's no guarantee that's going to have enough financial advice on it.
Yeah. So, this is just an estimate, but, when I looked at the team members, I watched interviews of the CEO and the CTO talking about it. These guys clearly know exactly what they're talking about. They sounded super educated. The CTO was, he was able to make these really complex concepts on exactly how these nodes worked and how they, anonymously split up the order between the nodes. He was able to, put it into layman's terms that actually made sense, and so, you're not able to do that unless you have a profound understanding of the technology.
Yeah.
And it's clear it's clear that they knew what they were talking about, that they'd be able to get it done. They'd also had previous experience using dark pools because the CEO founded an investment fund called Virgil Capital beforehand that was doing large OTC Bitcoin trades, and that's how he realized that this dark pool needed to exist. So he has the experience behind it.
And it's either Gemini or Kraken is the only exchange.
I think Kraken might run a dark pool, but I've heard nothing about that.
Only some of the fun guys that trade like real Bitcoin futures and licensed broker dealers that I know in this space have told me that I think it's Kraken, that they do have a dark pool option that you have to be approved to get set up for, accredited investor, things like that. But there's a huge market for it, and the reality is a lot of us don't understand that market because we don't play in those waters. So, nevertheless, regardless, even though calculations that we said are completely ignorant and absurd, at a $40-50 million market cap, from everything that I've learned over the last few days, really digging in. I'm bullish. I like it. I think it's a gem, and I'm going to be buying. $2 million in volume too. $3 million. Oh yeah, if you add the rest up, $3 million in volume on a $50 million coin is especially in this market, especially considering they're not on any. OKX isn't a small exchange, but I mean it's definitely not one of the. One of the big boys. So I'm excited about that.
If we see it listed, but the thing is I think that one of the reasons we're not hearing about it is because they don't care about retail investors. This is a project for people who have over $1 million to be trading. So they're not advertising it. They don't care about that. Like they probably already know everyone who's going to be using it. It's this top 1% trader. That's all they care about. They don't care about marketing it to you. So this is the kind of thing that you kind of have to find on your own. You're not gonna they're not going to be doing huge marketing campaigns because they don't need to. That's not their target audience. So
no doubt. So yeah, gem for you guys. This video we will share with the rest of your friends in Discord. later on, and then eventually it'll be public on YouTube, so don't forget to subscribe. We are going to try to put out a ton of content on YouTube going forward now that we have some of our other ducks in a row. We've got some more people on our team now. We have a lot of really exciting projects. CoinLoop that we talked about earlier today, quick plug. You can go to trycoinloop.com to check them out, and they're partnering with us in a couple of different ways, and we're excited to bring you guys more tools, Inner Circle members, and Bravado VIP alike. So stay tuned, ask your questions in the Discord, or if you're watching this on YouTube and you're not familiar with the Bravado Discord, you can learn more at bravadovip.com. Cap, thank you for joining us in real life. I know that
for having me.
We're going to have you on remotely, definitely in the near future. But
giving me the option to dox myself.
Yeah, I basically said I'll fly you to Chicago if you put that face on camera. And
now he knows. Now everyone knows I'm not a 40-year-old man.
But thank you guys. Enough shit posting. Thanks for hopping on. Hopefully you learned a little something. We're gonna, like I said, continue to do this. Hopefully had a little bit of fun. And Captain, like I said, thank you. And I guess that's it. Until next time, we are out. Peace, everybody.